Welcome back. So what's the momentum story this month? Well, tech hit a wall. Momentum has still stopped unless you are gold and silver. But your momentum, I'm afraid, is all bad. Here's our portfolio for July, and it's been very difficult to build a momentum story, except maybe a negative one for gold and silver. Here are two of our top picks, or former top picks. Both are now down over 30% in 6 months, and just out of the bottom decile again. So maybe the momentum trade today is short gold and silver. Hi, if you're new to the blog, I'm Mark. I'm an ex-investment banker, and I've been managing my own money for the last 20 years or so. I run a financial training business, and I work with some of the world's biggest financial firms. We're trying to see if we can beat a major index by using market momentum data. It's simple. Can we get a better return than the index without taking a lot more risk? Each month, we build a portfolio of funds. This is this month's portfolio, and then we follow it for 6 months, and we see if we beat the index. It's been a mixed month for markets, but the real story is the tech frenzy is corrected. If we look at July's worst performers, they're largely the year's best performers to date. Some were even in last month's portfolio. Ouch. So what happened? Investors have sold the chip stocks. Korea, which has been the biggest winner on the way up, went into bear market territory. The month was marked by a series of trading stops, and by the month end, Korean retail investors were holding heavy losses. The Kospi index was down 14%. A lot of leveraged and focused new ETFs made things worse. The SOX index of chip manufacturers was also down by 11%. So, a very, very bad month. More broadly, amongst the Magnificent Seven, investors have turned their focus to free cash flow, and performance has diverged a lot. Alphabet, it was punished for negative free cash flow. Meta, likewise. On the other hand, Microsoft's Azure business drove a huge 1/3 profits jump, and Microsoft saw the biggest one-day market gain, that's market capital gain, ever for a US company. Perhaps the biggest question, though, for the future of tech is to AI token costs. The index of frontier model tokens is $5.63, so $5.63 per million. The index of open source models is 55 cents per million. And some of the cheapest models, take a cheap model, a low-end one like DeepSeek Flash, it costs only 4 or 5 cents. NVIDIA have a new chip called Rubin. That GPU will give 90% cheaper tokens per kilowatt. This shows the pace of innovation in chips and this downward pressure that it's going to put on token costs. As more of you use more open source models, which you can run on your own computer, and more Chinese models, that unit price that the AI companies will charge is going to fall. The question for tech, though, or for tech investors is, has the sentiment emphatically changed? Like it did for precious metals. People are buying the dip now, but will it stick? Perhaps one reliable momentum play for now, perhaps the only one, is inflation. The US economy seems strong. The Fed governor not raising rates may heat it up more. The momentum looks good. And were an ETF like the Wisdom Tree ETF I show you here, were that in the data set that we use, it would have been in the 33rd place over the last 6 months, so one of the best performers. So I guess how have our portfolios performed? The strategy has had a terrible month, terrible. Particularly portfolio 25, last month's portfolio. Like a Korean retail investor getting in on the action at the end of the trend and losing big. Now, in the experiment, our strategy was to diversify by buying 4 high performers that were in distinct sectors. But this year, that's been impossible. All the high momentum funds are high momentum for the same reason, tech. High performing funds in Korea, Asia Pacific more generally, global emerging markets, technology. They're all concentrated in the same stocks. Now, I'm not giving a disclaimer here, but this blog is not an investment advice. It's an experiment. What's driving markets, and in practice, does a pure momentum strategy work? That's kind of what we've been exploring for this last couple of years. Now, it's perhaps worth having a little aside about my own investing. Does this experiment inform what I buy? Yes, absolutely. But if we take July, I had positive returns, just having cut my tech exposure in June. I de-risked broadly as well. My logic was twofold. I felt markets were very stretched. Valuations are high. There's a lot of leverage in portfolios. And I've been worried about the economics of AI. I saw these 3 IPOs of SpaceX, Anthropic and OpenAI as being the kind of events that mark a peak. Investors, if they aren't already fully invested, if they aren't all in, then they will be all in after this. Where will the new money come from? Equity markets could be a mess. I felt a retreat would be market-wide. I was only partly wrong. Now, I'm not being smug. I've been perennially underinvested in tech, so I've missed too much of the upside to feel smug when I see I've missed a fall at the end. Yeah. So August, if there's a month to ensure we stick to that original thesis for performing but separate sectors, then perhaps now is that time. It's very difficult to find a positive momentum theme. So equally, this month may be a time not to follow momentum at all, but instead to go short. I guess if we look at the worst and best performers tables this month, which you'll find in the blog, in both the best and the worst performers list over the last 4 weeks, we find Chinese small cap companies. That's dispersion, not momentum. So I said it's been difficult to pick a positive theme. It is easy, though, to pick a negative theme: precious metals. BlackRock Gold in general, a previous top performer, has been in the bottom decile over the last 12 weeks and 26 weeks. It's only just managed to get back into the 8th this week. The story is identical for Amati Strategic Metals, another previous top performer. If we think about these precious metals, perhaps that's the lesson for chip stocks and AI at the moment. Go short, or at least don't buy the dip. And for now, don't be long. Well, that's the end of my little video. Thanks again for watching. If you're interested in more detail about portfolios, visit the blog at capitalcitytraining.com or search for me, Mark Woolhouse, on Substack. If you have any thoughts about where markets are going, leave us a comment below. Or if you enjoyed the video, give us a like and subscribe. Our underlying data comes from Salty Dog Investor, who are our partners on the show. Look it up. There's a 2-month free trial. It's very good stuff. Thanks again for listening.